Thank you everyone for joining us today for exploring AP and AR automation, key trends, requirements, and pitfalls to avoid. Before we begin, I just want to make a note that we are recording, so if you are curious to go back and watch this webinar at any time, you should receive an email from us within the next few days with the recording. Secondly, we do encourage you to engage with the polls. If you are attending from CPA Academy, you are required to answer at least 3 poll questions for CPE credit. And lastly, please use the Q&A feature if you have any questions, and we'd be happy to answer your questions via text. Thank you so much. And with that, I will pass it off to BC and Ken.
Thanks for having us. Looking forward to the next hour or so. My name is BC Krishna. I'm the founder and CEO of Centime. I'm nominally, I guess, the host of this session, but I'm certainly hopeful that, my co-panelist, Ken, will take charge and run roughshod over us from time to time. Over to you, Ken.
Great. Thanks, BC. Yeah, so I'm Ken Suchoski. I'm the Payments and Fintech Analyst at Autonomous Research. We're an independent equity research firm, so we write research on payment and fintech companies, and looking forward to the discussions.
And what we wanted to do was to really spend a little bit of time digging into 2 really important topics relating to how finance departments at small, mid-sized businesses and certainly large enterprises are transforming certain key functions. I have spent the better part of the last 10 years working with and on AP, AR, and payment solutions. So come at this problem with that experience. The goal is to really provide a broad view into the marketplace. It's evolving and changing very rapidly. So I come at this from the perspective of a solution provider, having sold solutions to small and mid-sized business for many, many years. Ken, I think you follow the AP and AR and B2B payments from a different perspective. Please give us your view on how you've approached it.
Yeah, absolutely, BC. So what we do, like I said before, we really focus on analyzing businesses and industry trends. I've been an analyst at Autonomous for over 5 years now. So really following the space closely, and some of these companies on the AP side or AR side have gone public in the last several years. So we've gotten more information on them. We've done deep dives on them. And it's quite fascinating where they are in the adoption curve in this market. So yeah, our perspective is really trying to understand the businesses, how they make money, who the different providers are, kind of what are the pain points they're solving, and that's how we've gone about it.
Ken, I think the public companies are a great lens into the broad market, right? I mean, I think that in some ways it's the tip of the iceberg. You have visibility into these companies because they are public. They're sharing information about their products, their financials, their strategy. Whereas, for every public company in this space, there's probably like 10, 15, 20, 60, 100 emerging that are below the surface that, represent the broad market as well.
No, absolutely. It's, it's tough. They don't disclose all the data on all those private companies, but yeah, that's exactly right.
Great, let's dive in. So I think just let me set it up by, making some obvious points, right? So every aspect of our personal and professional lives, as should be no surprise, is being transformed by technology. And one of the buzzwords that we keep hearing about is the sort of notion of digital transformation. And that digital transformation has long touched many parts of the enterprise. Obviously, sales departments, marketing departments, to some extent, the finance department has lagged. But what we've seen in the last, I would say 5, 6, 8 years, certainly within small and mid-sized businesses, is that digital transformation is touching 2 critical processes, very important processes, but historically been manual and relatively inefficient in the sense of being ad hoc, manual, mostly paper-based, and somewhat risky. And these 2 processes are critical. They're critical to every enterprise: the accounts payable process, the process of accepting payments, invoices from a supplier and making payments to them. And of course, the inverse of that is the accounts receivable process, the process of sending invoices out to a customer and getting paid by them. Both of these are mirrors of each other, of course. And over the last several years, we've seen an explosion in the number of companies that have started to both adopt these solutions and also offer them. One of the observations that, of course, we'll make is that COVID has accelerated this digital transformation. Should come as no surprise to people that, when you're, working from home, you can't go to the office to, pick up checks that need to be deposited or, print and mail them. And so we've seen sort of an explosion in an interest on the part of businesses that work remotely to digitize these processes so that they can execute them, remotely.
All right, so over the next 45 minutes or so, our experts are going to try to solve some of the following questions. Like, what are the key requirements of modern AP and AR solutions? How do solutions meet your business needs? So your company size, accounting systems, your industry vertical, and so forth. What are AP and AR solutions priced at? So going through a little bit of the pricing structure and the ranges you can expect. What is the ROI for these solutions and how can you justify the purchase? And what to watch out for. So what are some of the things that may trip you up? And lastly, what are some of the current trends with AP and AR solutions? So understanding some of the agenda now for this webinar, I will pass it back over to you, BC.
Let's set the stage, right? At some level, this is a very, very simple way to describe it. And we'll look at it both from the buyer as well as the supplier. Different terms that sometimes people use, payer, payee, vendor, and so forth. We're trying to use the term buyer as the person that makes the payment against invoices, and the supplier is the one that presents the invoices, right? I mean, so the task is a pretty simple one. From an AR perspective, the supplier sends an invoice over to the buyer and runs a process to do so, and at some point receives payments and then completes the process after the payment is received. The flip side, of course, is what happens on the buyer side. The buyer receives an invoice from the supplier and goes through a process to actually process that invoice and make that payment. And then once the payment is made, there's a bunch of things that happens, bookkeeping type things that happen within the buyer's sort of universe. So at some level, this is what everybody's doing. But each of these processes, the AP process from the buyer perspective and the AR process from the supplier perspective, are very complex. They may be standard, but they're complex. There's many different parts to it. And what we're going to do is to run through, again, not because we're trying to teach you something new. I think everybody understands and has been running these processes for a very long time. But the main goal here is to try to create a unified framework that you can then use to run your own buying processes for AP and AR solutions. So let's talk about AP first, right? Another thing that I just do want to highlight, and is that over the last, I would say, it's not like AP solutions are sort of suddenly, kind of descended upon us in the last 5 years, right? So AP automation has been in vogue for many, many years. What's kind of new is that, what used to be a large enterprise solutions for, let's say, a Fortune 500 company processing hundreds of thousands of invoices every month, has now moved down market into $5 million, $10 million companies that process tens of invoices, hundreds of invoices per month. And in so doing, what's happened is that we're seeing emerging a framework for an AP solution that consists broadly of two phases of AP. First is the so-called invoice processing, and subsequently is payment processing. Of course, all of this has to function within the context of the company's accounting system. The accounting system, as we know, is the center of the universe. It is where buyers and suppliers store their customers, their suppliers, their cash balances, their reconciliation, and everything else. And so the invoice processing step is one where the buyer receives a paper invoice or a PDF, unstructured PDF document from the supplier, captures data, in other words, extracts the so-called header level and line level information, and then prepares that invoice for approval. So there's an invoice capture step, there's an invoice approval step, and then obviously, because this is an accounts payable and therefore a liability, you don't want to be posting invoices into the general ledger, into your accounting system, that are not previously approved. So that's kind of the invoice processing step, and it's kind of actually a logically complete step. And then, just because the invoice is posted doesn't mean that you're immediately going to pay it. There's usually terms that have been provided to you by the supplier. It may be 10 days later, 20 days later, 30 days later. or if they've given you early payment discounts, you're sort of trying to adhere to whether or not you can take advantage of them. But when you do decide to make payments, there are a few more steps that every business goes through. There's the authorization of that payment, segregation of duty, dual authority, deciding who to pay, when to pay, and so forth. And then once the payment is authorized for execution, there's a task of actually getting the payment out. Once the payment is sent out, you still have to close out that open payable in the accounting system, and that sort of finishes the process. So invoice processing, payment processing taken together, I would say represent our perspective on what makes up a modern day AP solution.
And the most of the pain, BC, I think, is really in the management of the invoice. I think that's when we speak to companies, it's really in that part of the process. And so, I think that's the biggest need in the market, and what provides the stickiness is on the software side of the business. So if you digitize that invoice, it removes the need for somebody to walk around with paper to get that approved. And then because you digitize the front part of that process, it opens up the ability to electronify payments later on. So yeah, happy to dig into that more if you'd like.
It's as good a time as any to, just, have some fun with numbers, right, Ken? I've heard people talk about studies and seen studies that suggest that it costs something like $15 to $20 to manually process an invoice, and about $5 or so to execute the associated payment. That adds up, right? Even for a small company, that adds up.
Absolutely. Yeah, I think you're exactly right, BC. You add all those up, and when we do our analysis, you mentioned the ROI, if you adopt a solution like this, I mean, our math suggests that you're somewhere in the, call it 50, 60, 70% type of range in terms of what would the cost be if you're doing this manually versus the cost if you had an automated solution.
And just again, since we want to have fun with numbers, I think I read other studies that in the United States today, we process something like 20 billion invoices every year. So, it doesn't take a genius to, to do the calculation and say that, 25 billion invoices times, if you were processing all of those manually, $20 per invoice, that's a pretty large number. And so, of course, like already large percentage of those invoices are automated, but we still have a long way to go.
Yeah, absolutely.
So, and again, afterwards, if you're interested, we'll send this presentation out so you can take a look at it. But what we've also tried to do is to highlight some of the key components in each of this step, right? From capturing invoices, approving invoices. Approving invoices, we often think of it as a workflow component, right? Where the invoice is sent out to the person who incurred the expense to approve the invoice prior to posting. But sometimes the onus is on the AP department to actually match it against a purchase order. And it is excruciatingly painful because very rarely the theory is that the invoices match the PO, right? But the reality is that, very rarely does it happen. And so, often that sort of PO matching process can also be very painful. So again, I won't go through all of this stuff, but maybe just highlight the fact that, one of the things that happens as a first step in the AP process and the payment process is that, just because an invoice is due doesn't mean you're simply going to pay it, right? I mean, businesses make decisions on, who are you going to pay, when are you going to pay, how much are you going to pay, and those decisions are less about process and much more about cash and cash flow. I mean, if you don't have cash, obviously it doesn't really matter. The supplier payment is due, you're not going to pay it. Or conversely, if you have, payroll versus a supplier payment, guess what's going to take precedence? So those decisions are really critical from the standpoint of, actually making those payments. So what we have also built, and if you're so inclined, we can share this with you. It's a fairly neutral view into what it takes, and based on your own priorities, you might sort of score these differently. It's just a list of different sort of, components at the next level of detail in terms of what the feature matrix is. Let's dig into this a little bit more, right? I mean, some of what we've kind of talked about thus far is the fact that AP solutions today, modern day AP solutions are end-to-end. They address both invoice processing and payment processing. Is that true in the real world? Do you find companies that focus on one or the other?
Absolutely. I mean, that is my definition. BC is really a full end-to-end solution, right? So there's a lot of point solutions out there that might focus on OCR, optical character recognition, or another part of the process. I think a full end-to-end solution is addressing all those pain points that you mentioned earlier in the presentation. And so, yeah, from what we hear, it's really around the management of the invoices, right? So bringing those into into a system, getting those posted to your systems, and being able to approve your invoices and move them along throughout the process. And so that's the biggest need in the market. And again, I think when you look at companies, I mean, common companies that are public, like a Bill.com and others, they're doing all of this kind of end to end. And like I said before, I think if you digitize that front part of the process that you mentioned, it allows you to really electronify the back end, which is the payment processing. And so if you're walking around with sticky notes and paper, there's probably a good chance that you're paying with checks as well, right? Just because you haven't digitized that front part of the process. And so, yeah, I think all those pieces that you hit on, BC, are part of that full end-to-end AP solution that we think about.
So here's the kind of, and again, this is something that I had teed up for a little later on. We might as well hit it right now, Ken. Here's the thing that I always like, maybe I can get your perspective on, right? I mean, when I was selling AP automation solutions at my previous company, we found exactly what you're talking about, right? I mean, the real pain in AP processing is digitization of the invoice and then approval and then posting into the general ledger. It's a very painful process. At the same time, what we find is that, maybe you do this, but I've talked to lots of analysts that sort of refer to this AP solution as a B2B payment solution. This disconnect, this spiritual disconnect is what I'm trying to reconcile in my mind. If customers are not really interested in digitizing payments, why are we calling this B2B payments?
Yeah, it's a great question. I guess I would offer up a couple, a few. My initial thought on that, BC, is that I think part of it is because the B2B payments industry is just decades behind the consumer to business payments industry. So just some stats on that. If you look at the US, consumer to business payments, about 70% of those payments are done via card. And when you look at that from the B2B side, it's single digits. And there's all sorts of ways we've advanced on the consumer side, whether it's Apple Pay, whether it's PayPal offers a great online payment experience. I think close to 50% of all B2B payments are done with checks. And so we still haven't moved forward as quickly on the B2B side in terms of digitization. And so I think AP and AR automation solutions are really addressing the pain points that have held B2B back from really digitizing payments and moving forward on that front. And so what we hear is, and from industry consultants and some of the bigger players in the industry, B2B payments, it's this $120 trillion global opportunity. And just because I think some of these AP and AR providers are going after this market, then people want to say they're tapping into this huge TAM. So I think that's one of the reasons. Second, I agree that capturing data and approving invoices are the main pain points, but the end goal of the AP and AR workflow is either to make a payment or receive a payment. So that's what happens at the end of the process. And so I think that's what people see. And as an outsider, you're really making a payment at the end of the day. And then I think the last thing I'd mention, BC, is that a lot of the automation is really happening behind the scenes, right? It's the workflow automation, the approval process, all of that is happening behind the scenes. And so I think the workflow automation part just gets talked about a little bit less in our conversations.
I'll say that, it feels to us, Ken, and, I think you agree that, it's really about where we are in time. Once upon a time, it was the case that, people looked at payments and invoice processing and payment processing as two different processes. But for a variety of reasons, not the least of which is that by bringing those together, providers can actually offer a cost-effective solution, to the marketplace. And I'll just say one other thing, which you may or may not agree with, is that in as much as invoice processing is the real pain point, the way in which companies that provide these solutions are valued and make money is on the payment side, right? That's a critical component of how they monetize solutions.
Yeah, no, I totally agree with that. And we'll probably get into that a little bit later as well.
Yeah, so we can't really separate these two. And I think the key point here is that, in as much as some businesses might want to separate these two out, it really makes a lot of sense to sort of consider AP as the end-to-end process taken from invoice processing through to payment processing. But let's take a minute now to switch gears and talk about the supplier side of things. So again, in as much as AP is complex, AR is complex as well. And the thing about AR, as you can see here, it too consists of several steps, and I'll sort of highlight a few of them. It starts with understanding, look, at some level, what's happening with suppliers is that they're selling goods and services to customers, and many times they're offering payment terms. And those payment terms are, net 30 or net 15, net 10. They may be offering early pay discounts. But let's be clear, suppliers are in effect offering credit. This is what they're doing. By giving your customer 30-day payment terms, you're basically saying, I'm going to give it 30 days of credit. And suppliers, whether they like it or not, have to understand the risk associated with that credit. So there's a kind of core element of managing risk and and setting the terms that you're comfortable with. Because at the end of the day, if that risk scenario comes to fruition, then your cash is impacted. And so, it's a critical thing that, every supplier needs to be able to keep track of. Once that is done on a routine basis, what suppliers are doing are presenting invoices, and that can be, done in a portal. It can be done by email. It can be done by paper. I think the flip side of this is once the invoice is presented, of course, the AP person is taking that invoice and capturing it somehow. Once the supplier is ready, the customer is ready to pay, they may follow their own process to pay, as we just seen, or it's possible that they go to the supplier's portal and make payments using check or ACH. That's the sort of payment portal that often suppliers provide. Routinely, we're seeing more and more AR solutions that provide so-called reminder campaigns, where, typically what happens is that a supplier would follow up with a customer when the payment is past due. And of course, you don't want that to happen. But, we've seen many AR solutions today in the marketplace that have integrated as a key component of their solution the ability to run reminder campaigns before the due date. Hey, I'm sending you an invoice, and a few days later, I'm going to drop another note to you saying gently to remind you that, hey, listen, I've extended credit and you have an obligation to pay me. And so I'm going to sort of follow up. It's a little bit like a marketing campaign that you send to the customer, and you follow up with a sort of a tone of voice that's appropriate to the reminder. Very, very important, very valuable. We're seeing just about every AR solution have some kind of payment reminder capability. But payments do go past due. And when they do go past due, there's a collections team that has to step in and manage that. And that can be a painful task. But at the same time, managing collections, making phone calls, following up with customers, recording their interaction, recording promise to pay, following up with dunning letters. These are painful tasks that, can and should be automated. And just about every AR solution today has some kind of capability to manage collections. Finally, one of the most painful parts of an AR solution is to actually, take the cash that you received. So of course, the happy path here is your customer has paid you on time or paid you early, sent you remittance detail associated with the payment, but the cash is now sitting in your bank account. Well, the task is to be able to take that cash and apply it against the receivable, the open receivable in your general ledger, to make sure that it is now closed out and it reflects your cash balance and your working capital and so forth. So cash application is a critical step in the whole process, and it's often a very painful step because there's often very little information that you get from the bank statement that matches up to the open receivable. Now, if you have a very small number of receivables, it doesn't really matter, but increasingly as businesses grow, that can get really complicated. And it can get even more complicated when what the cash that you receive has a bunch of different deductions against it. The customer's taken a discount, they've applied a credit, they paid by credit card, which basically means that they've taken the merchant discount off the top. They've made multiple invoice payments using a single payment, and in the worst case scenario, all of the above, right? And so that sort of task of applying cash can be painful. So again, what we've tried to do is to highlight a little bit more of the detail associated with each of these things. And then, like I said earlier, a matrix that, helps you assess how important these are, to your own buying journey. AR, it's a lot more fragmented, it seems, and Ken, please jump in at any time. One of the things that I'll tell you is that it feels to us that maybe it's because AR has historically, the receipt of cash has been historically seen as more important, more critical. After all, it's cash. Businesses have invested in many more point solutions in the AR space. And I think we're seeing very few of the end-to-end AR solutions. I'll say it differently, fewer end-to-end AR solutions than end-to-end AP solutions. That's a bold statement, Ken. I don't know if you agree or not.
I definitely agree with that. I mean, that is consistent with what we see, BC, when we do our bottom-up analysis. I think you've seen the AP side of the transaction develop a little bit faster and progress a little bit faster than what we see on the AR side. So that's very consistent. I think you're right. I think we've seen more point solutions on that side of the transaction. I think AP tends to be, it's a little bit more homogenous than AR, right? I think with AR, you can kind of break it down to all the steps, the 5 or 6 steps that you mentioned: credit terms, invoicing, getting paid, applying cash, even managing collections. So there's a lot of different steps, but I think the rhythm of an AR team, their initiative, I think it's a little bit different business to business. So when we talk to companies, it just seems like it varies a little bit more. You can be focused on, on the consumer side, you might have e-commerce, you might do small e-commerce. So I think the rhythm and the process are just a little bit more different. And so, yeah, we've certainly seen the AP side of the market develop more quickly, just because I think you have a more scalable solution. Going back to what you said earlier, some of these companies generating more economics on the payment side of the transaction. So I think we've seen more providers really focus on the AP side and push that harder. But AR is definitely, there's a lot of pain points like you mentioned, and so we expect that side of the market to develop over the coming years.
And less leverage to some extent, right? I've always observed that in a typical B2B transaction, the buyer has more power in the transaction inherently, right? They're the one paying, right? And so the supplier has less leverage. So you might say, I have this portal and pay me on this portal. But if you're, $5 million company selling to Walmart, it's pretty unlikely that Walmart is going to use your portal to pay you.
No, that's a great point, BC. And I think you're right. At the end of the day, right, there's 2 rules of business. It's the customer's always right is rule number 1, and then rule number 2 is see rule number 1. And so I think if you're a buyer, right, and you're buying goods from that supplier, you're the customer, right, at the end of the day. So they want to keep you happy. So I think it's a great point.
Yeah, so I think that's why we've seen some of these things sort of turn into individual point solutions. But that's not to say that it can't be done. There's the same things that we've talked about on the AP side are also true on the AR side. Nobody wants to buy a risk solution and an invoice presentment solution and an online payment solution and a reminder solution and so on and so forth, to the extent that even if it's not used, to the extent that you have all of these things sort of combined into one end-to-end solution, it can be beneficial to the customer. So that's where we are. So I think that, we've mostly addressed all of these things. We talked about why has AP evolved more? Why is this a B2B solution and so on and so forth? I think we can move on unless you want to add anything else here. The only other thing that I'll say is that, Ken, we've not really seen, and I don't know if you have, it seems there are companies that provide AP solutions and that we've seen companies that provide AR solutions. I'm not familiar with too many companies that are purveyors of both, end-to-end AP solutions and end-to-end AR solutions. Have you? Is that, why is that?
Yeah, I think it's a great observation, BC. I think when we do our bottom-up analysis of the industry, we find the market is segmented a couple different ways. One is you generally see automation providers focus on one side of the transaction. So they're either doing AP or they're focusing on AR automation. And then secondly, if you go a step further, within each of those, within AP or within AR, these companies will serve a specific segment of the market based on the end customer size. So you have some providers focusing on really small customers, really small businesses, other companies focusing on the middle market, and then others on the enterprise. But I think you're exactly right. I think both sides of the transaction, AP and AR, need to talk to each other, because that's how you're going to get greater visibility into your business. And so cash flow isn't just about days payable outstanding. It's also about understanding your DSO. And so if you understand what's happening on both sides of the transaction, it should provide better visibility into the cash and the cash flow of that business. So the decisions in the AP department will impact the business's overall cash. And so it's not just about understanding which suppliers you're paying, how much of your payments are late. It's understanding, and I think you kind of hit on this earlier, when do I need to delay a payment or speed up a payment because I have enough cash in my account and I want to maintain a relationship with the supplier. So I think connecting those two functions, I think, makes a lot of sense. And I think that's where the market is headed. And you've already seen a couple companies talk about this, really becoming this one-stop shop. And then I think taking this a step further, BC, where this market is really going, I think it's beyond just combining traditional AP and AR. It's also about how can I bring visibility into my corporate card spend, bringing that into the equation, understanding my payroll, other adjacencies that a business could really understand where the cash is in their business and what the cash flow looks like.
Exciting stuff. Inventory is another one that comes to mind. I think there's a lot of, opportunity that extends beyond, but the core processes, as you mentioned, AP is about, moving money out of the company. AR is about moving money into the company, and they're connected at the hip by the fact that it is about cash and money. So we'll talk some more about that as we go through this. Now, the thing that I wanted to just really segue and move towards is sort of, success criteria, evaluation criteria, for AP and AR solutions. This is not, this is not talked about enough. And I'll be the first to tell you that, when I was running my, Mineral Tree, my previous company, we recognized very early on, and most providers today, all providers today, make integration with the general ledger, with the accounting system as the central tenet of success. You can't have an AP or AR solutions without an integration with the general ledger. The accounting system is always the financial system of record. All AP and AR solutions integrate with one or more accounting systems. And as you think about your buying journey, the question really is does your prospective AP or AR solution integrate with your accounting system? Again, everybody says they do. The question really is, how well do they do it? And and it really comes down to the degree to which that integration is effective can be the difference between success and failure. Bidirectional, near real-time synchronization between the accounting system and the AP/AR solution is not only critical, it is expected. If you're going to post cash to the general ledger as part of a receivables process, you want that cash to be reflected immediately. If you're going to make a payment against an open invoice, you want to have that payment be posted against the open invoice immediately. There's no point in having some lag take place between those two. So bidirectional, near real-time synchronization, I'm talking about minutes as opposed to hours between the accounting system and the APR, so critical. And like I said, the quality of the integration it reflects almost everything. This cannot be emphasized enough. If there's one thing that you will take away from the conversation today, it is to highlight the importance of accounting systems integration. And what I'll say is that it is critically important to ask a few questions about the nature of the integration. And by the way, guys, this is not self-serving. This is not about what we do and how we do it and so on, what somebody else does. It's a truism. It's a basic fact of life. It's really, really important that no matter what solution you end up with, you ask these two questions. Is the integration out of the box? In other words, do you as a customer need to go through a project to get your AP system, your supplier's AP system integrated with your general ledger? If it's not out of the box, then it's going to be expensive, time-consuming, and generally not scalable. That's one thing, right? So is it out of the box? And the second question is it done using the native API of the accounting system, Or, by the way, many of them simply don't provide, native APIs. That's not to say that, the provider of the API or AR system, they can still engineer things to ensure that, this can be done through some kind of an API. But if you're going to do something using a file-based data exchange, which is also relatively common in this marketplace, please understand that it can work, but it can be very fragile. These file-based data exchanges are extremely fragile. They have very poor operational characteristics. And, generally speaking, they can have high failure rates because they're not done well. The third thing that I wanted to say is that, especially as you move into, slightly larger companies, a $50 million, $100 million company, it's quite common to actually customize your accounting system to implement, for example, custom fields associated with invoice capture. These things do happen. And when they do happen, it's going to have an impact on your API and AR provider because they need to know about those fields when it comes to invoice processing, for example. The question, of course, is how well does your provider support any current customizations you have and any future customizations? Because the last thing you want to do is to simply one day wake up and learn that your accounting AP and AR providers have gone kaput, simply because you made a change in your accounting system. So just please keep this in mind. And like I said, it's critically important to understand how well these systems integrations work. At the risk of, making everybody angry, I will also tell you that, please beware of custom integrations. And also beware of claims of integrations with all systems. There are a bunch of AP providers that will, AR providers that will come and say, like, we integrate with everybody. Really? How do you do that? Exactly, right? And, because the reality is that not all accounting systems are that open to being integrated. So just be careful about these kinds of claims and ask the hard questions about exactly how is it done? What does it take? What is the implementation? And these basic questions about, is it file-based? Is it API-based? And so forth. There are some systems that, really have are closed systems. I'm talking about like accounting systems. And so you may have no choice but to be in a situation where you have custom integrations because you've customized your own system heavily or because there is no standard API. If you still want to support, an automation on API and AR, you may have no choice, but to go with a custom integration. But hopefully as the market matures, you'll see more and more accounting systems mature to the point where they offer APIs and more API and AR systems mature to the point where they provide out-of-the-box integration. I'm sorry to have gone so long on this, but I really think it's important to, to understand how well your API and AR systems integrate with your general ledger. Ken, do you have any thoughts here or?
No, I think you did a great job covering that, BC. And I mean, you know this way better than me as well, just because this is a little bit more in the weeds. So I think you covered it really well. And one thing I'd say, and maybe we'll touch on this later, but I think as you move up market, you're getting more kind of specialized and verticalized in your ERP solution. And there's certain AP automation providers that might focus on certain verticals. So that's just one thing to consider when making your decision.
Yeah, makes sense. So I just want to also provide some color on, since we're talking about the different types of accounting systems and general ledger systems, people often don't realize how diverse this market is, right? So I sat down one day and tried to make a list of all of the accounting systems that are in the marketplace. I stopped counting at about 240. And as you can see, this is a very long tail, and you might recognize your own accounting system in this. Obviously, just in terms of raw numbers, QuickBooks dominates. We look at the U.S. Census Bureau looks at the market, U.S. businesses from the standpoint of employer businesses and non-employer businesses. So basically, there's about 26 million non-employer businesses. In other words, sort of sole proprietors, and there are about 5 or 6 million employer businesses that employ at least one employee. So this marketplace, this chart that you see is a map of accounting systems that you'll see in the employer businesses. QuickBooks dominates, QuickBooks Desktop, QuickBooks Online, and there's a whole bunch of other applications. And some of these applications are being heavily invested in. And some, but at the same time, just because you have a small footprint doesn't mean it's not important, right? It just depends upon what market you as an AP or AR provider are focused on. We'll spend a minute on that. So for example, you'll see Microsoft Dynamics 365 Business Central, right? It's way down here, but Microsoft is putting a big effort into kind of, into making that popular within the middle market. So we'll expect that to sort of grow over here as well. So this is what the universe looks like in terms of accounting systems. The next question that I want to just really talk about, and Ken touched on this, is does the industry vertical matter? From an AP and AR perspective, are the accounting practices in the industry unique? Yes, they are. I mean, in construction, for example, we've seen, for example, project-based billing, or in property management, you'll find a single property manager managing hundreds of, different individual buildings. And that has an impact on many things. One of the key things that it often impacts, because the processes associated with accounting and AP, the practices are sometimes so unique that you'll find accounning systems that are unique to that market. For example, in the public sector, especially with schools, there's a company called Tyler Technologies that focuses on it, or Sage 300 CRE, which focuses on commercial construction in the United States. 70% of construction companies in the United States, use Sage 300 CRE. So 2 points I want to make when it comes to AP and AR solutions. By and large, the process looks the same, from in the chart that we showed you earlier, but there are some nuances and there's some unique things that happen within these industries, as you all know. And sometimes those unique things are better supported by an industry-specific general ledger, right? I've highlighted Sage 300 CRE. It could be that, you have, Blackbaud in nonprofit and so forth, Genzabar in education, things like that. So just please keep that in mind, that you're really focused on an APAR system that might implement a standard process, but really, once again, focus on your industry, to do its thing. Can jump in at any time.
No, I think it's well said.
So then finally, what I wanted to do is to really talk about size. Company size does matter. And, I'm going to sound like a broken record here. Size often translates into scale, and scale often translates into process, and process translates to what ERP system and general ledger you use. And you can see, what we've tried to do is to break the market up into these 4 broad segments. Size often translates into the general ledger. So, if you're a small business with 10 to 20 employees, let's say about $1 million to $2 million in revenue, chances are you use QuickBooks. And, by virtue of the fact that you use QuickBooks, which is a broad market system, guess what? Good news. You can probably use one of many very good AP and AR systems that integrates with QuickBooks. As you move into mid-market and you see companies with, 2 to 100 million in revenue, it gets more fragmented. At the same time, 50% of the market is covered by about a half a dozen general ledger solutions. QuickBooks, again, plays a big role. NetSuite, Microsoft Dynamics, several others. And once again, you see a lot of AP and AR providers that sort of support these solutions. And then, of course, once you get into the large market, once again, the kind of you'll see a smaller number of, financial and accounting systems sort of playing a role here. SAP, Oracle, dominating the marketplace. So, Ken, I think this is your wheelhouse. What I'd love to do is to turn this over to you and maybe, give us a sense for, how the industry is settled into a pricing structure. You touched on this earlier. Please let us know, if you're able to, just really, give us your view on what you're seeing as far as both pricing structure as well as pricing trends in the industry.
Yeah, no, absolutely, BC. And I just skimmed this slide quickly, and you hit on all the key points that I was going to touch on. So I think this slide really sums it up. But maybe to go into a little bit more detail, I think generally what we find is that AP providers focusing on the very small end of the market, they generally don't charge a software fee. I think a lot of micro businesses might have a tough time justifying that price if they're only doing a few transactions a month. But as you move up market, you start to see a combination of software fees and transaction fees. And so on the subscription side, the fees, like you have mentioned here, BC, are generally priced on a per user per month basis. And so as you add more users to the platform, as your business grows, you're going to pay more in fees. We also see that many of these companies have different tiers or packages that you can sign up for. And as you move up in tier, you get more features, more functionality, more modules. Oftentimes, if you integrate with a middle market ERP system or general ledger, you're going to pay more on a per month basis. It's just more sophisticated. And then exactly what you have here on a per transaction fee, BC. Generally, what we find is that the providers will charge different fees, depending on the transaction type and the payment method that is used. So, in certain cases, you might pay a per transaction fee for a check payment or an ACH payment. You mentioned some of the credit card payments and how some of these companies are trying to shift to these card payments. Sometimes those fees are waived, and you can actually earn rebates on those fees. And so those fees wouldn't be paid by you, the buyer. They would actually be paid by the supplier when they receive that and process that payment. So it's a combination of subscription and transaction fees. I don't think we need to get into the specifics around each provider's pricing, but that's a sense for kind of what we're seeing in the market. And there's new payment types as well emerging in terms of real-time payments, fast check payments, overseas payments. A lot of companies are embedding cross-border payments directly into their platform, so you don't need to leave the platform to execute those payments. You could make all your domestic and cross-border payments in one location.
Thank you, Ken. I think just to, again, set the stage here, right? So what we're saying here is that much of these are, so generally speaking, we don't find big upfront fees. Rarely do we see like implementation fees, integration fees, things like that, right? I mean, they may happen if it turns out there's a custom project, as we talked about. But by and large, scalable pricing means there's no implementation fees upfront or very modest implementation fees upfront. And we're not talking about millions of dollars in sort of subscription fees on an or overall annual fees, subscriptions and transactions on an ongoing basis. So that's on the pricing. Then a couple of things I'll really touch on. The ROI should be pretty straightforward. We've kind of touched on it a lot. Right at the top, we said on the AP front, as Ken said, it costs a lot to do this manually. Sometimes you take it for granted because it's all hidden in various sort of, manual processes. But if you were to step back and think about what it takes to process an invoice and process a payment, miss out on early pay discounts, be hampered by late payments, lack of controls, overall, the ROI, can be pretty straightforward. AP solutions typically can reduce processing costs by 60%. Improvement of payment controls, measurably reducing the risk of fraud. I mean, I think this is something that is not talked about enough. One of the key things that happens within an AP solution is the implementation of a payment control, segregation of duties, and dual authority. And as we all know, segregation of duty, dual authority has a very significant impact on by mitigating the risk of fraud. The person who initiates the payment shouldn't be the one that processes the payment. Immediately, that means that somebody is sort of, phishing and asking for the wire to be sent to them, is going to be, out of luck because you got two people that are unlikely to be fooled by that scheme. And then finally, we're seeing, as we said, many AP solutions facilitate payments by credit card. And so, those rebates provided by card issuers can add up. But again, also very importantly, can also improve working capital because based on when you make the payment, you can get anywhere from 20 to 50 days of additional float by moving the payments on a credit card. And just the act of making a payment on a credit card is non-trivial, particularly in the B2B setting. So it's really important. And Ken mentioned cross-border payments, another area where, doing something manually is excruciatingly painful. As you all know. So the more you can bring all of that into one common solution, the easier it is to justify. We provided really qualitative elements of the ROI. And of course, all of this stuff can be, turned into actual raw numbers. The same thing is true for AR, right? I kind of, first I want to highlight this little chart that I pulled from a recent D&B report. They actually break down late payments by industry vertical. This one caught my attention, right? You look at the chart below, they focus on the construction industry, which is notorious for being impacted by late payments, right? General contractors and builders right? There's only 43% of people that pay them on time. 42% of them pay them 90 days or later. I mean, this is really, really badly impacted, right? So, and I think that we're seeing this trend, get pathologically worse. Late payments are pathologically bad problem in some industries. People just take suppliers for granted. It's back to that power dynamic. I can pay late, so I will pay late. We'll see what happens. Online payments do simplify process. They reduce payment delays. We talked about streamlining cash application, and of course, the automation makes collections team much more efficient. So major sort of components of making ROI for accounts receivable as well. But the main thing is like it just improves your cash flow. Cash flow means like you have more cash on your balance sheet, which basically means your working capital is better, which basically also means that your ability to ward off bad times or fund growth gets that much better. It's very straightforward, both in terms of AP and AR on the ROI front. So again, Ken, you touched on this. If you wouldn't mind kind of taking us through a little bit of this again. We've mostly spent our time today talking about point solutions on AP and AR, but we're starting to see more solution suites, not just AP, but AP and AR. We've seen sort of people bring together, and I've named some companies here that are doing this at the forefront of these movements. Please jump in, Ken.
Absolutely. I think what I call this, BC, is this shift towards a one-stop shop, right? Where you're not just tackling one piece of the AP process or just AP or AR. You're really bringing all of this together, and so. Yeah, you have a bunch of kind of adjacencies that I would say that are going to be part of that one-stop shop, right? So it's moving beyond traditional AP, AR. It's adding in spend management capabilities like Brex, RAM, Divvy. So a business, you could see the traditional AP kind of invoice activity as well as the corporate card spend, and then building out other solutions on top of that, right? So working capital is a big issue. I mean, our firm covers financial services companies, and with the rates going up, the Fed raising interest rates, access to capital is becoming more challenging. So some of these companies are in a good position to offer working capital and other financing solutions. So we certainly see the market evolving to become this kind of one-stop shop.
I will wrap up here by taking a few minutes to talk about Centime. I think what we are trying to do is to obviously bring a best of breed set of capabilities that follows along with these trends of building a solution suite. Our perspective on AP and AR is what we've kind of touched on here and there through the course of the last hour. AP is a process. It is about moving money out of the company. AR is a process, but its goal is to bring in cash. AP and AR are joined at the hip because they both impact cash. And as Ken has said before, cash balances and forecasts impact how you manage AP and AR. One of the critical steps, that sits between the posting of the invoice and making the payment is the decision about who to pay, when to pay, how much to pay, and how to pay. Whether you use whether you use cash, whether you use credit, whether you pay using a credit card, and so forth. I think it's important that those decisions, as critical as they are, be done in the context of your cash forecast. On the AR side too, right? I mean, you have collections, but which collections do you want to go after? Which customers do you want to focus on to send out reminders? When are you willing to pay early pay discounts so that you can collect faster? Are you willing to accept cards, even though they can be expensive, so that you can get paid on time, if not earlier? Some of your customers may have a proclivity to pay on time or even pay early if it turns out that you accept a card. That has an impact on your working capital and your cash. Without understanding your cash, it's just really important to, recognize that, AR processes can leave something desired. So what we have is a perspective that, in order to do a good job, it is important for businesses to manage AP and AR as part of a larger cash management solution. Brief commercial, this is what we do. We have brought together a set of capabilities that help businesses manage cash as they grow. It's a set of solutions that are built on a common platform, ranges from cash forecasting, AP automation, AR automation, a bunch of cash reporting. I have a bunch of bank accounts. How much cash do I have at a given point in time? How is that cash behaving over time? What are my DSOs, my DPOs, my trends over time? And by the way, if I need credit, can I depend upon Centime to underwrite credit for me? So that's what we do. We integrate directly with QuickBooks and QuickBooks Online and NetSuite. We are not all things to all people. We also focus on companies with between about 1 million and 100 million. And, look, I have a lot of experience in this space, and we've built the solution to make it really, really easy for businesses to do their thing.
BC, Ken, thank you so much for all of your insights today. If anyone is interested in learning a little bit more about Centime, I encourage you to check out centime.com/demo to book a demo with one of our Centime experts to learn a little bit more about our product. And you will be eligible potentially for some of our gifts from our virtual shop. So please look out for an email from us for more information about that. And thank you so much for joining us today.